When Apple, Amazon, and Netflix move at the same time, that's not a coincidence. That's a signal. Wall Street Trapper just said it. These giants trimming costs and shifting models means money's repositioning. The quiet part, when trillion-dollar companies pull back, they're making room to buy the dip when you panic. Don't get emotional, get strategic. Stack cash, study their patterns, and move when they move. Because when big tech sneezes, the whole economy catches a cold. Let's check this clip out.
Every empire falls the same way. Rome, Spain, Britain, and maybe America. It always starts the same. A strong currency, a powerful economy, and a belief that nothing could go wrong. But then they print too much money. The debt piles up, and the history does what it always does. It repeats itself. And this week, something massive happened, and I really want us to lock in. Amazon, Apple, Facebook, Meta, Google, they are the big dogs in the market. We just waiting on NVIDIA. These are the companies that define innovation in America, and they just sent the market a message. Not to mention, now we have OpenAI flirting with $1 trillion IPO. And the question now is, are you paying attention? Now, this week shook the market. But before we get into any of that, I need you to like, I need you to subscribe, and I need you to share this out. I need you to help me get at least 2,000 likes on this video. That truly helps the video push. It truly helps the content go in the algorithm. Thank y'all for the love that y'all been showing. And I gotta say this, man. Everything I'm saying is information and education, but it's designed to help you just see the market a little different. This is not financial advice. So make sure you take the information that I get. I've done a lot of research, but I want you to also do the research before you make any kind of move. But at the end of this video, after I break down everything, I'm gonna show you a stock that I'm gonna pick that I think I need to be buying. I'm gonna be adding it to the Robinhood portfolio. I looked in the last video, a lot of y'all said, yo, Trap, we really like that. So be it, that's what we gonna do. This week wasn't just about earnings, y'all. It was the turning point on how we really end 2025. And maybe how we start the next decade of wealth. All right, let's start with Apple, Amazon, Google. They soared through the market this week. I'm talking about they went crazy, right? Like, we saw the market actually being dragged down because of Meta and because of Microsoft, right? Two of the big seven. Now, I will say that we saw that Meta did actually would have had really good earnings, but they had a tax pay of $15.9 billion. I mean, it is what it is. Coulda, woulda, shoulda. Like they say in the hood, if was a fifth, we all be drunk. So what? Y'all saw me come in and say, hey, y'all, I'm going to buy me a share of Meta in that portfolio. And I'm going to actually, in the Patreon, we already own some Meta contracts. And I wound up just buying another one yesterday. So it is what it is, right? But let's talk about another one, right? Let's talk about Netflix. Right? The big dog of streamers didn't really do too good for earnings. But guess what? It was such a dip. They decided to do a 10-to-1 stock split. So we just need to see what's going on with that. We need to break that down. So let's talk about this. When they move, the market moves. We understand that. So first of all, we're going to talk about Apple for a second. Apple reported double-digit growth, expecting a 10 to 12% revenue increase this December. Wow, thanks to the iPhone 17 demand. That's not just another iPhone. That's consumer confidence, global supply chain stability, and pent-up demand for the iPhone. Now, I will say this. I said this before. Apple isn't just selling iPhones anymore. It's building an ecosystem. I said something in another video. I said, Apple is not really just a tech company. Apple is telling us how consumers feel. Apple is telling us when that iPhone demand, when that iMacs, when those AirPods, those wearables, when those things boom, Apple is kind of replacing Walmart in a way where, from the technology side, the more devices and the more wearables they can sell, that tells us the state of mind of the consumer, and the economy sees that. And so we got to really be willing to look at Apple like that and not just look at it as a tech company. CEO Tim Cook told CNBC that the current quarter, which ends in December, will see a total, listen, 12% year-over-year basis. That is huge for Apple, especially when we saw how good they did in China. So when Apple runs, we know that liquidity started to run through the market. And we saw it when Apple made earnings, we saw that stock drop, and then we saw that thing pop up. And it went crazy. It ended really strong. And what we did see was, as a byproduct of that, we saw everybody else move. And so I just want people to know, my favorite saying is always, an Apple stock a day, keep the poverty away. And then there's Amazon, AWS. Their cloud business, man, it grew 20% year over year, hitting 33 billion. Wait a minute, man. 33 billion? Sheesh. Now, mind you, they had an Amazon hack earlier this week where everything was down. Your Robinhood was down and so many other things were down. AWS is truly the big dog. And it's showing you because they blew Microsoft out the water. AWS is the big dog. Now, I'll be the one that go on record. I've been the one saying for a long time, everybody needs to own Amazon stock.
Won't they do?
Everybody needs to own Amazon stock. Why? They are the everything store. They are the everything store. Stock surged. And that's what carried the market. So CEO Andy Jassy said, this is the fastest pace of growth since 2022. That tells us businesses are spending again, which means the corporate world sees light at the end of the tunnel. Now, here's something we talked about. Here's some things that we had to understand. That's bullish, not just for Amazon, for the economy. Why? Because they are the everything store. So just like Apple tells us, when we see Amazon spending it, but when we see that cloud, we know something big is happening, y'all. And I want us to lock in on that. I want us to pay attention to that. Netflix, the big dog of streaming. What did they do, y'all? They came out and said to us, we're doing a 10-for-1 stock split. Now, in case you don't know what that is, here's what a 10-for-1 stock split is. If you own one share at $1,000 in that split, you'll now own 10 shares, and they'll probably be $100 a piece. The total value stays the same, but it makes the stock more accessible to new investors, which will give them more liquidity in the market. Historically, stock splits actually drive trading activity and short-term momentum. I truly don't like it because the stocks never move the same after that. Don't matter what I think. I own it. I've been owned it. I ain't going nowhere. Now, Netflix is beefing with Disney right now because Netflix saying that Disney is blacking out some of the stuff because they're having an issue right now. Disney understands that it really can't compete with Netflix when it comes to that, but they're having an issue right now. They beefing right now, and nobody loves beef. Nobody loves publicly traded beef better than Trap, yo. I really love to see that, right? But the stock split, it takes place in November, right before the holidays. Optimism, gonna push the market up, y'all. There's no better time to be an investor. There's no better time to be a trader. Why? Because we saw what the Fed do. We saw the Fed say, yo, we about to print this money. We're gonna ease quantitative tightening. And then we're gonna start printing money back into the beginning of the year. What did that do? That gave the market a whole lot of optimism. And I said something. Now, we knew for a fact that everybody wasn't going to hit for the fences. We knew that. We knew somebody was going to fall off, and it had to be Meta, and it had to be Microsoft. And everybody in my community know, I always say this, man, I don't trade Microsoft. I just stay away from them. I've always did. These earnings, they don't live in a vacuum. They're happening right after the Fed announced a quarter rate cut, the first in 2 years. Now that's few, because even though they are tightening, that's easy money. So liquidity is coming back into the system. Why? Because people get to get money for cheap. Combine that with Apple, combine that with Amazon, combine that with Google, combine that with Netflix, combine that with what's going on, and you have a setup for a November, December rally. This is how bull markets quietly begin. Not in euphoria, but almost in like disbelief. Like, is this really happening? But with all that, I want to take us to this. And I want to do a little story for us. I want us to understand something. Because once we see this, I want to paint a bigger picture for you, because sometimes we get lost. And my goal is to help us be wise, to build wealth the right way. So we'll start with Rome and the denarius. It was 95% silver. It was real money. It lasted for about 300 years. It powered one of the greatest empires on earth. But when Rome overextended, wars, ruled, luxury, they started diluting the coin with copper. It was 95% silver, it became 5% silver. Soldiers refused to even accept the payment, and then they wanted to get paid in gold. As a matter of fact, they demanded that they get paid in gold. And what happened? Gold prices soared $1,000. And when the money died, so did the Roman Empire. But let's fast forward a little bit to Spain. Well, Spain, 1500s. King Philip. He borrowed heavily to fund wars and expansion. He defaulted 4 times, 1557, 1575, 1596, and 1607, owing money to a lot of people. And by the end, 60% of Spain's GDP was in debt. Inflation exploded, and silver from the Americas flooded Europe. They called it the pricing revolution. It wasn't just a name, it was the world's first inflation crisis. The empire that controlled the world's gold lost it all by printing too much paper. This is a recurring theme right here, y'all. This is a recurring theme. What happens is we start seeing when gold is the one thing that's constant, but it's in man's nature to spend money. Let's even talk about Britain. The British pound was backed by gold for 200 years. London was the world's epicenter of finance. But in World War I, they suspended the gold standard. They printed more money to fund the war and never recovered their dominance. By World War II, Britain was broke. They turned to the U.S. for help. And that's when good old JP came in. And the American banks, they became the world's finances. And it's nothing worse than, you don't want America to run that thing. And that's when America takes the throne. In the Bretton Woods Agreement, at a Bretton Woods conference in 1944, the world crowned their new financial empire. It was the US dollar. And every currency on earth, they were pegged to the dollar. And the dollar was pegged to gold at $35 an ounce. This worked until the U.S. did what all empires do, y'all. They overspent. Vietnam, welfare programs, the Cold War. You remember when Jay-Z talked about Reaganomics? By 1971, Nixon had no choice than to do what all the other people had done before him. They ended the gold standard. The dollar became pure fiat, backed by none but faith. Since that moment, the dollar has lost over 90% of its value, of its purchasing power. Gold went from $35 an ounce to over $4,000 to $4,300 an ounce. History did not just rhyme, it actually repeated itself. So why am I saying that in 2025? Because echoes empire. And I always got to give us the backside, the flip side, the round side. I always got to make us see it and not just the euphoria. I want us to understand something, y'all. Assets. Do not have your wealth just backed in dollars. Because now that the USA is now $38 trillion in debt. GDP is now at 120% debt to GDP, worse than Spain before the collapse. Central banks around the world are buying gold at record paces. We see China buying gold like none other. They are quietly positioning themselves for what happens when the dollar collapses. And even though the dollar is still the most dominant currency, the shift has begun. People start trading in the wine, the gold, and Bitcoin is rising. Every empire believed it was untouchable until the money supply broke. Now I want you to understand that's what's at stake here. So I get it. You like to see the dollars in your bank account. But I want you to understand something, y'all. Assets is what we need to be at. Owning assets, owning stock, owning Bitcoin, owning real estate, owning gold. That little pullback in gold, y'all, it didn't really hurt us. Yeah, you had some people riding the high like, yeah, gold. We was riding, I'm not gonna lie, the trappers, we had some gold options that was going crazy. Made a whole bunch of money on some, lost a couple dollars on another one. It's okay, it's part of the game. But you own that gold. The dollar not gonna save us. The government not gonna save us. Build portfolios that can make you some money. So, what do we do from here? Well, you don't fight the system. You position yourself inside of it. You own real assets, not promises. And that's what the dollar is. It's a promise. That means quality stocks, man. Hard assets like gold, digital assets like Bitcoin. I like Ethereum as well because they are outside of the traditional fiat system. So a lot of people going to hate, oh, the market ain't doing it. The market, listen, you are owning real businesses that print real money. And what you got to do is use the money to buy the assets so that the assets no longer have you attached to the money. I want you to think about it. I want you to do that because these are the things that's going to save us. Well, as always, what I've been doing is I've been showing you all that I truly have been locked in. I've truly been dialed into owning stocks. So the stock that I'm adding to the portfolio today in Robinhood is none other than Rigetti. They are truly building something so strong with quantum computing. The kind of tech that will power for the next 20, 30, 40 years of innovation. Just like NVIDIA at one point was the picks and shovel for AI, Rigetti is the picks and shovels for quantum. Strong patents, growing partnerships, and a small market cap. That's what an asymmetric upside is. Because every wealth cycle ends the same way. Those who saw the shift early didn't just survive, they built dynasties. And so this is why today I purchased 3 shares of it in this portfolio, just so y'all can see it. Because I want y'all to understand that every empire will fall, currencies will collapse, but wealth doesn't disappear, it just transfers. And the question is, what side of history you gonna be on? You gonna be on the side that's saying, I missed it, I didn't get a chance to be a part of the run-up, or you gonna be on the side saying, hey, I got it at 6, I got it at 7, and now it's $200, $300, $400. That's what I'm doing with this. We're gonna keep building positions in this, in my bigger portfolio for sure, but in this portfolio, I'll keep adding something here and there. Pullbacks are times when we supposed to add more money to companies that we love. So that's why I told y'all about Meta. When that pulled back, we just gonna add more to it. We're not running away from it. I want you to stop looking at the market as when some go on sale, you got to run away for it. I want you to embrace it. Every time the market pulls back and it gives us those things, we know for a fact. I told my travelers this. I said, yo, Meta is an $800 stock, y'all. Easy an $800 stock. I said that when it was at $600. Well, it got back to $600 and some dollars. Guess what? When Apple and Meta beat, y'all saw what it did. It went up $8 overnight. It'll be back to 800. And if I'm being real with you, it'll probably be back to 800 by the year's end. It'll probably be back to 800 by the year's end. Because we also got a Trump-China deal. What did they say to each other? Hey, let's put a truce out there. 1 year truce. That 1 year truce on top of everything right there, that's it. So the market has to have those healthy pullbacks so it can load up and take off again. I need us to stop looking at those healthy pullbacks. That's time to run away from the market. And we see those healthy pullbacks. Those are times to jump in the market. Those are the times where we say, hey, this is it. This is the one. So I think everybody, just from my perspective, you should own Meta. I think you should own this Rigetti. I think you should own Amazon. I think you should own Apple. And we talked about something about Apple. We say out of all the Mag 7, they the only ones that's not dependent on TSM and NVIDIA. They making their own. So, man, I just want to say something right quick, man. I hope you got value from this video. Y'all know for a fact, man, make sure you like, make sure you subscribe, make sure you just share this video with somebody. Thank y'all for the love that y'all been showing, man. I just been trying to give y'all real stories. I've been trying to tell the story so you all can see it from multiple different angles. And you all have been showing me that you really appreciate that. So thank y'all. I appreciate y'all. Make sure y'all like, make sure you subscribe, and share this out. Trap wisely. It's your boy, the Wall Street Trapper, and Wall Street looks like us now. Salute.